Hi everyone, today let's talk about some portfolio thoughts. Then we'll take a look at all the usual longer term charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at portfolio thoughts, how can we boost your returns in the current market environment? They talk about having dual momentum-based strategies, and taking a look at some of these other assets. Obviously, we don't want to be too condensed, especially in tech right now, which continues to suffer. Really across markets, everything looks pretty awful except for those safer stocks like utilities as well as staples are doing quite well now. But what else is out there? What can do well under economic stress? And here's some of the things that they talk about here. So equities, obviously not a great place to be. SPY has been suffering. They do talk about international. It's probably not going to do any better. We talk about HYG or J&K, high yielding bonds. I've been a big proponent of bonds. I've been accumulating bonds. I do think it's a good place to be, at least for now. And I don't think you're going to get a better opportunity to lock in the current rates. Rate cuts are coming. I think yields are going to continue to go lower. So just keep that in the back of your mind. But the big one that I really wanted to highlight here is real estate. VNQ. There's a bunch of different REITs out there that are yielding pretty good returns on a monthly basis. Mortgage real estate investment trusts, also another alternative there. REITs, I do like them. I do hold quite a bit of real estate. And I do think it should be 20 to 30% of your portfolio as a whole. So REITs, good opportunity there. And then economic stress, GLD. GLD's been on a run for sure. Gold's been in good position. It's kind of consolidating right now, but I think it's going to go higher over the medium term. And then long-term bonds, TLT, again, definitely been a big proponent of bonds. I think bonds are going to continue to go higher as interest rates go lower, at least in the short to medium term. Taking a quick look at fear and greed here, you can see 39 for the week, down from a 62. It was a substantially bearish week, all the way up here, all the way to down here. So we've been in this pretty bearish trend. Looking at momentum, you can see 125 EMA sitting about 60 points lower, so looking for a touch of that in the next week. Strength continues to hover, breadth continuing to hover. Really, those are the only metrics that are probably saving this from being an extreme fear over here, because these are still hovering in greed. 200-day breadth, we'll look at that chart later. Looking at the put call ratio, looking for this to push up to that 0.9, then we can start to see bottoms potentially. And then looking at volatility, this continues to spike higher as we expected. And even bonds are back into fear and extreme fear. So markets definitely in a nervous condition on the back of that unemployment data. Looking at the AAII survey, you can see bulls stepped down to a 45 from a 51. We expected that. We said that 51 over the last 2 weeks was kind of the peak, just about as high as it gets. We saw 52.9 is the 1-year high, but 51, 52, right in that range. The bears were also in that very low range. 23, 24 is typically the low for the bear side. And now we're expecting this neutral to kind of drift back towards that bull side. So we'll see how it plays. Could take a couple of weeks for that to happen, expecting that medium-term downtrend. We did see neutral expand almost to 30, but like I said, just looking for this to kind of drift in this direction. Moving over to seasonality, you can see the low of the month for the NASDAQ is supposed to be the 10th. So Monday, more down move, Tuesday, more down move, and then we could see a little bit of a retracement. So this down move that we've been seeing actually fits with seasonality, and then we'll see how that plays going into the end of the second week of September, so end of next week, and then you can get some consolidation before we see a further downtrend. Obviously, this is a seasonally weak period in September, so just understand that that is also the trend. The Russell tends to see better months here for election years. You can see we can top out around a positive 1.5% before we see that fall again into the end of the month. So the low for markets is typically the 27th, but we do see a bounce here from the 10th to the 27th. Moving over to the calendar here, we do have 3 bullish days in a row, 10, 11, 12, up 10, down 11, up 11, down 10. So mixed signals on that, but overall they're saying this is bullish. And then for data, CPI, PPI, and imports, exports. So we get inflation data next week ahead of the FOMC the week after. And then looking at the economic calendar, pretty much nothing here for Monday or Tuesday, pretty light there. And then Wednesday, we do have CPI, 10-year note auction. That'll be interesting to see how that locks in after the moves we've seen in interest rates. Thursday, PPI, Fed balance sheet continues to be interesting, as well as the ECB interest rate. They are expected to cut here 25 basis points, so we'll see how that plays. And then for Friday, Michigan inflation data. Want to see that continue to hover, if not move down slightly, and then consumer sentiment. Moving over to the charts, starting with the S&Ps here on the weekly, you can see 4.25%, big down move on the week, absolutely massive. One of the biggest down weeks we've seen in a long time, going all the way back here to 15 April. That was about 3%, so we definitely eclipsed that. We almost had a week like that on 5 August, and then we clawed it all back over the next week, so definitely a big move. 21 EMA sitting there at 53.85. That's about 20 points lower from current. Definitely expecting a touch of that. Then we'll see what happens. If it bounces from there, we could be in good shape. You can see we've had multiple tests. Caught a bounce here, obviously gapped through it. And then we sidestepped on this candle, touched the 21, and then rocketed higher. So critical zone there, 21 EMA. The momentum is back to bearish, RSI breaking down. If that 21 breaks, then you're looking at potential support here at 53.07. And then below that, you have a move down to the 51.86 area. So critical zones here. Based on how powerful the move was this week, you would expect to push through there at least to this first level, potentially even that next one over the coming weeks. And then looking at that daily chart here, you can see this trend line broke here. That marked a bottom back on 2 August and then the top here on 12 August. So this is a critical level, broke that, it's falling, and it did fall more after hours. 144 EMA sitting all the way down at 53.03, momentum bearish, RSI looking for that oversold condition. Again, 53 makes sense, probably going to touch that zone. And then looking at the actual SPY charts, you can see that is in the middle of the range, so maybe you get a little bit of an overthrow to that 527.35. That could be interesting. That would bring you back to this consolidation from the end of May. 531.47 is the top of that consolidation. That would be the range though, right in that zone. Either way, expecting more bearishness over the following week, especially after that really powerful down move on Friday. Moving over to the Tasty charts, you can see that down week here, 21 EMA sitting right there, 537.28. ATR trailing stop, putting this into bearish conditions. We would have to get all the way down and close below 522.26. That'd be a big move. It's not impossible. We are right at that 21 EMA, so maybe we push through there, stack another big down candle like this one. It's not impossible. So something to watch for there. That would also put you right at the 34 EMA, which is at 523.36. Do keep in mind that this is still overall a bull trend. You can see these ATR bands are still trending higher. The lower bands are starting to level out a little bit, but we've seen that before, like this down move, they leveled out while that upper band was continuing higher. That is still happening here. So overall, you would expect this to catch a bounce at some point. It is concerning that we did have a clear double top here. We kind of saw that coming and we've been talking about it. So that is a little bit of a change in structure. You can see this previous high was much lower than the last high. So you can see the structure did maintain on this previous move with a high, higher high, but now you have a double top, which is a topping pattern. So based on that, you would expect to push down into the 481.38 area if this is truly a change in structure. And then looking at that daily chart for that short-term price target, that lowest ATR band is in the 530.28 area, right above that 144 EMA, which is the previous zone that we tested here. That's at 526.76. Based on this move on Friday, once we see that 55 break, I think we're probably going there. You can also see that we are officially in bearish conditions on the daily chart after that Friday move down, close below the ATR bands, big volume, selling momentum, expecting more continuation at least. Moving over to the NASDAQ, on the weekly, you can see 5.89%. Again, a very powerful move. We saw a move like that on 15 April, 5 1/3 or so. So a little bit more than that. Your next trend support's down at 17,867. Probably going to get there within the week, I would guess. That's about another 3% down move for the week. And then if that structure breaks, then you're looking at the 55 EMA, which could be another 5.25% lower. Momentum back to bearish, RSI breaking down. You can see a lower low on RSI, so expecting that to continue. Everything here continues to be bullish, just like you would expect. And then looking at that daily chart, 200 SMA sitting there at 18,130. Your next trend support there, again, 17,876. Momentum bearish, RSI bearish, waiting to see that hit oversold conditions. It's currently at a 37.17, so has some room to go. The move down from the Thursday to Friday sessions was about 7 points. So if we see another day like that, hit the 200, and then maybe touch that trend, that would bring us into oversold conditions. Then we'll see if this is going to hold a slightly higher low or not. Based on the structure, you would expect it not to with that high, lower high setup here. You would expect a lower low potentially, maybe as low as these previous lows from mid mid-April down in the 17,000 range. If we did see a move like that, that would be another 7 2/3 to the downside. Obviously, I don't think that's going to happen in 1 week, but just understand the potential for down move here is pretty substantial. And we have seen moves like that where we went from top to bottom here over 3 days. It was about 10%. So something to consider. It's not impossible to get into that range. And then looking at the actual Qs charts, just to give that some reasonable price action, you can see 446.66 is the next level. That 200 sitting on top of one of my levels at 441.81. I think that is probably where we're going. You can also see the highly traded zone is right there as well. So probably headed into this range here. And the volume here on that Friday, and the selling volume on that Friday was substantial. So expecting more move there. Moving over to the Tasty charts, again, looking at that weekly, you can see we rejected off that first ATR band here. That was right around the 478 area. And now we are pulling back to that ATR trailing stop. We are almost into bearish conditions on the weekly chart. We have not been in bearish conditions for a long time, going all the way back here to the week of March 27th. That's when we got back into bullish conditions. And usually once that happens, there is quite a bit of follow through on the weekly chart, many weeks of follow through. You can see we got back into bearish conditions here in January, and that followed through all the way down into December of 2022. So definitely something to pay attention to. Does not happen super often, and it looks like we are right on the cusp of that happening this next week. And then if this zone breaks here, we're right at that 34 EMA, 447.82. Then your next support would be that 55 EMA sitting there at 428.21. Momentum back into bearish as you would expect. Lowest ATR band, if we did get there, is sitting all the way down at 404. So that would be another 10% lower before we found substantial support here on the weekly chart. And then looking at the shorter time frame, still in bearish conditions on the daily. This happens. We've been in bearish conditions all the way since back here on mid-July. And now you can see ATR band sitting right there as support at 442.21. I would expect that we're going to hit that probably on the Monday, if not the Tuesday sessions. Volume coming through. This volume has actually been ramping as we continue lower. So expecting this to roll into more bearish condition, more downside to come for sure. And you can also see that ATR trailing stop did roll down with that Friday candle, took out all the EMAs and SMAs here. So definitely bearish conditions, waiting to see what happens over the next week. Again, price target 442.21. Moving over to the Russell, you can see the Russell pulled back right to that 21 EMA at 207.22, caught a slight bounce to 207.90, momentum, big step down. This has been pretty choppy price action, not seeing those clear follow throughs. This last rally has been higher lows and higher highs up until this last 2 candles, where we did end up getting a lower top here off of this high back at the end of July. So doesn't look super great. And at a minimum, you would look for a retest of the trend line here around 204. Then we'll see what happens. Is it going to push all the way down to the 200, just like we did on that 5 August week? That's currently sitting down at 198.32. So that would be another $9 of potential downside. Overall, this trend is still bullish. You can see we're still hanging out with higher lows here at that 200, but we do have to keep in mind that lower high structure. We've seen it before. High, lower high, we ended up holding up. If this happens again, you'd want to see it hold in this area, but the 200 is certainly still possible. And then looking at that daily chart, big down candle on Friday, just like everything else. 144 EMA would be the next price target on the daily, 206.04. Momentum bearish, RSI bearish, as you would expect. And then if this zone breaks here, the trend line sitting right there at 204, with the 200 below it there at 202.17. So a couple of zones of support could still hang in there a little bit. We have had 4 days in a row of bearish price action. Maybe we see a slight reprieve on the Monday and then a continuation lower, but either way, I'm expecting a little bit more downward movement. Moving over to the Tasty charts here, you can see that down week, still bullish conditions on the weekly. That's still sitting all the way down at 192.55. That's been flat for basically 7 weeks in a row here now. Momentum still bullish, so maybe we hold this kind of mid-range here. Last time we dipped all the way down to that 55 EMA on the weekly. Want to see that hold if it's going to do it. Otherwise, honestly, I'd like to see a higher low here. We've already taken out the high back from May, so that's not super great. Certainly could hold in this mid-range, but it's hard to say. Based on the previous move, you would expect that 55 EMA. And then looking at the daily chart, we're still in that bearish condition, just like we've been in like the NASDAQ. Lower high setup, tested the ATR trailing stop, rejected there. You can also see a lower high here with a high, lower high, sell off. Headed towards that 154 EMA at 205.57. on the daily, that's where you would expect to see, at least on the Monday session. And then if that zone breaks, then we're headed down to that lowest ATR band, which is at 201.62. So could get there within a couple of days, especially if this continues to accelerate like a falling knife. It does seem like that is possible and potentially likely. Didn't see a ton of volume on that down move, not like this up move that we saw here. So we'll see how it plays. Maybe there's a little bit of support in that 144 EMA zone. Moving over to the Dow here, you can see 2.82% right to that 9 EMA. Momentum step to bearish, RSI breaking down. We saw an RSI breakdown before, and it did end up holding up at this lower trend line, but even still with that, that would give you a down move of about another 2.75%. So right into that trend line here. We'll see how that plays. Could be an interesting zone. There's also some other dynamic support in there with the VWAP and 21 EMA sitting in there. If this structure breaks, however, you got the 55 sitting all the way down at 376.81. Pretty interesting. The Dow's been holding up quite well because strength has been holding up quite well. But with this most recent down move, you could argue this is kind of like a double top. We did have a higher high just barely, and then we gave it all back very quickly. 55 EMA there on the daily chart, 401.23. And then that support, the one we've been watching repeatedly as another interesting level, is 398.76. It's been critical. Once it broke here, a lot of move. Once it held here, got a bounce. Once it broke here, big down move. So super important level. Waiting to see what happens. Expecting at least a retest of that level. Moving over to the equal weights, even the equal weights ended up falling quite a lot, 3.08% right to the 9 EMA after being fairly extended, nothing crazy. Hit 69.64 on the upper move, so just short of overbought conditions, and you can see we were still well below these previous RSI reads going back to the end of March, so much higher price action, much lower RSI. You would expect a little bit more follow through to the downside. 21 EMA sitting in there at 166.78. If that ends up happening and we pull back into the middle of this range, this is going to start to look a lot like distribution with a consolidation here, fake out, breakout, pull back, consolidation, and then if this rolls here, that's going to be pretty terrible for markets. So something to watch there on the equal weights. And then looking at that daily chart, let's go ahead and extend out this trend line. We're probably going to see a test of that on this week. 55 EMA sitting there, 168.53, right on that trend line here. 167.53 below it, and then if that level, and then if this zone here breaks, then you're looking for the 144 sitting at 165.85. So momentum bearish, RSI bearish, volume ramping on this selling pressure. So everything continues to look bearish across markets. Moving over to the ratios, looking at the SPY Russell and NASDAQ SPY. SPY was the outperformer this week, as we kind of expected. We got the up week last week on this ratio. Momentum step to bullish. You're expecting a little bit more here. So SPY outperforming. Russell not doing great, and then the NASDAQ was the worst of the group. So makes sense. Momentum bearish, RSI bearish on the NASDAQ SPY, and structurally everything is broken here. So next level is the 200 down at 3.32. So you should expect a little bit more NASDAQ underperformance, and then SPY. If it could potentially break here at 259, maybe push to 256, could be interesting there. But this is the same zone we rejected off of 2 weeks ago. Moving over to the SPY divided by the M2 money supply, you can see we got that big bearish candle, broke the 21 EMA. Your next support is at 24.49. Momentum bearish, RSI breaking down after the retest here, so we expect to go a little bit lower, at least break the 50 line. And really there's no clear support on this chart until that next support here, which was the low from that 5 August week. So this says we're going quite a bit lower, and based on that structure, that's another about 4.5% lower. So something to consider. This chart looks a little bit more bearish than the regular SPY charts. Moving over to the MAG 7 chart, interesting chart here. So we're kind of in this wedge pattern similar to what we've been looking at on Tesla. We had this upper trend here, established that 2 weeks ago, rejected off that level. Now we got a big down move to these trends here. Your next support is that 249.41 level, but if this zone breaks right here, there is a ton of downside potential on this weekly chart, about 8.5% down to that next level, which is 230.52 and that 55 EMA. Remember, this is still a bull trend, so you still have that support at the 55. We could see another bounce from there, but at this point you would expect a retest of that zone, very similar to what we saw on that 5 August week. So could be quite catastrophic coming off of this next move. Then we'll see what happens in this zone. Is it going to be more consolidation, or is it going to cut right through there and push to that 217.46 level? Moving over to Apple and Microsoft. Apple putting in that lower high setup, just like major markets. Big move down this week, 3.5%. Big step down, RSI breaking. Looks like Apple's probably going to push down to that 21 EMA based on the weekly chart down at 206.58, which is right in line with my level here, 207.14. And then you got trend support below there around 204. So this is the zone that we're looking for, which means we're probably going to break through here another couple of percentage points this week. And then looking at Microsoft, we've been calling this distribution for a while. Clear consolidation, breakout, pulled right back to the range, lower high setup, and now it's probably going to break down here. So momentum bearish, RSI bearish, looking for that 55 EMA to break at 393.60, which is pretty close to my level there at 394.22, which was the price target. Moving over to Tesla and NVIDIA here, you can see Tesla did exactly what we thought it was going to, broke out, hit the level 232.57, and then immediately pulled back on the market sell-off right in the middle of the range. So again, we're back here. That's a fake out breakout. Usually you get a push down after that. If it breaks down, the next price target is probably going to be close to this previous low, around 188.50 is my level. You could look for a lower low here. 177.70 would be my next one. If this continues in this downward pattern, which we kind of saw set up here, then you would look for that test of that lowest trend. So keep that in mind. And then NVIDIA, colossal down week, 13.86%, absolutely massive. Clear lower high set up here. You could argue double top. Either way, it's a reversal pattern, which means this is probably going significantly lower. And based on that kind of a pattern, you should expect a retest of the midpoint at a minimum, which is that 90.69 level. If it breaks from there, your next price target would be the 55-week moving average, which is down at 78.82. So NVIDIA could have a lot of downside potential, and if it did pull back from top to bottom down to that level, that's about a 40% down move, so pretty substantial there for NVIDIA. Obviously, it doesn't compare to the massive up move that we've seen on NVIDIA, but it's pretty decent back into that range, and I think that's probably a more normalized level. I don't think this stock is going to zero by any means, so if it gets into this range, it's probably a buying opportunity. Moving over to Amazon and Alphabet here, both of these were down pretty substantially. Amazon's hanging in there a little bit better. You can see it did break back below this trend line. Thought we might get some continuation, but we're still in the consolidation because we are above that 55 EMA, but below the 21. So we're in this choppy range here. Probably expect a retest of the 55 down at 164.06. Then we'll see what happens. Wait to see a little bit more consolidation probably. But looking at Alphabet here, 7.86% to the downside this week. Broke the 55, probably going lower. This previous move here into the bearic channel was about 15%. So if you get another 15%, that could take you down to this key support zone right here, which is that highly traded zone, and my level there at 138.22. Moving over to staples versus discretionary, as you can see, this rocket ship might finally be running out of fuel here. We finished halfway up the candle, so showing just a tiny bit of hesitancy there. Still a strong candle, and this is a bunch of bullish candles in a row. Still bullish momentum, but super overbought at a 76.5 on the RSI, and clear divergence obviously between staples and discretionaries. Discretionary selling off, momentum bearish, RSI bearish, expecting this to break down here below that 180.10 level. Look for a push down to that 174.76 level. In that 55 EMA, you can see that previous test was all the way down at the 200, which was 167.97. Moving over to oil and gas and utilities, some of the strongest sectors. Oil and gas has pulled back pretty significantly, back down to this previous level here from the beginning of January or so. Now we're going to see if this zone holds or not. Understand that oil and gas has been in this consolidation for a while. This is the same price action that we saw back here in March of 22. So in this zone is the same one we've been in. Looking at that 200 SMA as support still at 121.05, which could give you a little bit more downside. Understand oil and gas has that big dividend, which helps support this stock, but right now it does look quite bearish. It is below all the EMAs, looking at that SMA as support. And then looking at utilities, interesting to see this one throwing a big wick rejection. Obviously this has been on a rocket ship, bottomed out around $60 back in February, and it's been straight up basically with a very minor pullback here, rally up almost at those all-time highs at that 77.96 level. Could be just a first test and a slight pullback, but it's interesting to see that everything sell off on Friday, and utilities did participate in that. You can also see RSI divergence, higher RSI read back in May with much lower prices, lower RSI, higher prices, which would give you that potential for a pullback. If it did, 21 EMA would be where I would be looking at 71.25. Moving over to Breadth, interesting to see that 20-day Breadth breadth did not hold in this range at all. So we got into that super extended range that we talked about, immediately sold off from there, and then pulled back all the way into the zone where you can see we're already extended to the downside. One or two more candles, maybe some wicks into this 30 to 35 zone here, and then that's usually where you start to see short-term bottoms, see that little bit of a rally up, give markets a little bit of reprieve and a relief rally, and then we get that continuation lower. So we're already there on the 20-day, 50-day, plenty of room to the downside. This can push all the way to the 40s, and it's still in the 58 zone, so that would give this plenty of room to the downside, multiple weeks of potentially more price action. Question is, how does it happen? Obviously, these pushes happen in waves, so you could see a retracement here, get a little bit of consolidation, and then the continuation lower. Based on how the price action is looking, honestly, I would expect a retest of this zone down here in the 26 area, which could take a while to get there, a couple of weeks typically. We've had really strong candles, but that's not common. Moving over to 200-day breadth, big down candle there as well. We talked about this being a zone of resistance. We did break the downtrend on a closing basis, but now we pulled back into the range, looking for a move back down to this lowest trend around 61. Again, that would give you about one more week, maybe even a wick into the zone, something like this, like we saw on the 5 August week. Touch that zone, then we'll see what happens. Momentum is bearish, RSI is breaking back down, so still bearish, but pretty tight range that we've been in over the past couple weeks, going back to 1 April. Moving over to the dollar did get a down week here, 0.5%, nothing crazy. It's still in this kind of consolidation. I think we're going to find a short-term bottom here. I think we're going to get a relief rally, retest some of these EMAs and SMAs, maybe up in the 103 to 103.60 area right here in this range. Then we'll hit that 21 EMA. Could take a couple of weeks to get there, and then we'll probably see that continuation lower. This is a structural move on the dollar. Once we get that rate cut, the dollar is going to continue to sell. I don't think that's fully priced in yet. But obviously this is extended to the downside. You can see we hit an RSI read of 28.27, got a slight reprieve, slight pullback, probably going to see that continuation higher on the dollar in my opinion. Moving over to the 2-year and the 10-year yield, you can see we finally got into normalized conditions. So it's been a very, very long time. I think this is actually the longest inversion in history, very, very long. But now we're back here, 3.65 versus 3.71. So we're in normalized conditions, new relative low on a closing basis for the 2-year. My next level is back here at 3.27. Momentum bearish, RSI definitely oversold, but again, this is structural, so it's probably going to continue at least a little bit. This is where we found support back here in April of 23, so maybe you see a slight bounce, but we did close below it. Close below these previous bodies as well on these candles. So 2-year continues to look quite weak, down 6.9%. And then looking at the 10-year, you can see we did close below 3.75, pushing towards that 144 EMA at 3.59. Momentum's bearish, RSI is also bearish, not quite as oversold. I think it'll probably hover in this range. I think that's a reasonable level for the 10-year yield. We got as high as 5% before pulling back, tried to get back there, lower high setup. Now we're kind of flat here, consolidating. I think it's probably going to stay here while the 2-year goes a little bit lower, especially with that 144 EMA sitting there at 3.5. I think it could hold that zone, kind of consolidate and let that 2-year fall. Moving over to JNK and TLT, you can see this very long consolidation on JNK. We broke out, we kind of retested a little bit, waiting to see if this holds or if it breaks back into this consolidation. Again, structurally, I do expect this to push higher, push towards that 200, sitting up at 98.46, but we did see a step down on momentum. RSI still intact, so we'll see how that plays. Probably going to retest the SMA and then see another push higher. And then looking at TLT, we have that low, higher low set up here. And now we're looking for that higher high, retest of the 144, which is all the way up at 105.46. I think TLT is going to break here, push into this 102 to 103 zone here, the same zone we were in back in June of 23. So looking at TLT to push up into here and retest that 144. Probably not in 1 week, probably in the next couple. Moving over to the VIX. As you would expect, a very bullish week here for the VIX, 49%. It's right at the level, 2250. If it breaks here, headed to 2889, which is the same level that we hit on that 29 July candle. I think we're going to touch that probably this week. Then we'll see what happens. That is an important zone. You can see back here, March of 23. And then we have this elevated period here where we kind of chopped in and around there. But I think we're probably headed here. We'll see how that plays. A little bit more downside, 1 or 2 more candles will get us there. And then once we're in that range, that's a zone where we don't really stay for very long. We've had periods where we stay elevated for a couple of weeks, but realistically, that's not what I'm expecting. It is still interesting to me, though, that we did see that higher low setup, so maybe there's a little bit more structure here to come. Something like this where you get a push, pretty strong move, higher low setup, strong move, higher low setup, where you actually do have some structure on the VIX. It does happen occasionally, and that is what we're seeing at least in the short term here. So big spike up, consolidation. Usually that means you're getting one of those medium term downtrends, which I certainly think is possible based on what we're seeing across markets right now. Moving over to my accounts, I am probably way more bullish than I wanted to be going into the Monday, but otherwise looking at results, I think I was down 2.3%, which is not terrible considering that the NASDAQ was down about 5.5%, so a little bit less than half of the down move, which is usually where I try to be, at least less than half. So that was good. And I also outperformed quite a bit 2 weeks ago, so that helped. Overall, still hanging out here at around 130. I think we're probably going to see more down move on the Monday. We'll see how that plays. I have a 208 call here on my 100 shares, so collecting that $1.30. Probably need to roll that down a little bit more aggressively. We'll see how markets open on the Sunday night. Might try to mitigate some of these deltas with some futures, but we'll see. And then looking at the Qs, 449 for Monday, $3 credit there. The after hours move was pretty substantial, about $2 lower in the after hours. Obviously the spread's crazy right now on the weekend, but I think we were about $2 lower. Hopefully that recoups a little bit. And then I sold some 466s for $2 credit for a little bit further out, just to help again with those longer term deltas. Still positive delta. Shouldn't be really. This is definitely a downtrend, and I think there's more to come. Let me know down in the comments section what you are doing with your portfolio. Are you accumulating real estate and bonds right now, or are you buying this dip in equities? How deep do you think that dip is going to go? Let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.